I do want to get your take on China because you're really bullish on the country. Why?
Well, I think it's so helpful to have in a normal market, a free market, is a bid and an ask. So you need to see where the strengths and weaknesses. And I think what Gordon Chang is doing is providing this other part. It is not so pervasively negative. Like you can paint this picture of any place in the world, and I think there's another factor to consider. But it's very healthy to have this sort of view that he has.
Well, and one of the things that he talked about is some of the reasons behind what he sees, and he's calling for the coming collapse in the next year or 2 years, is this weakening economic data, the falling apart of the banking sector, and the slowing growth. When you look at the numbers, do you see the same thing?
No.
Okay, tell me why.
Because I see a huge, big program out to develop their economy. And within that, there's going to be lots of glitches and mistakes that take place. Their process of every time there's been a tragic accident or whatever, they're very quick to come in to deal with that issue and get on with life because they have a big program. The Communist Party is fascinating to me because there's two things that are very key to them. Social stability, especially since Deng Xiaoping. Social stability and a means for financial independence. So everything they do in the fine tuning, and they go a little mistake to the right, a little to the left in driving that car down the road, but they're not whipsawing all over the highway. They're basically adjusting that steering wheel on a regular basis. Social stability, and so when there are riots or protests in the street, they're not ignored. They meet and discuss because they know the significance of the Communist Party staying in power is not to have social unrest. An ounce of gold in Kazakhstan is not an ounce of gold in British Columbia. Even though the final ounce of gold has the same purchasing power, the exploration development is very, very different. So that you do see that you look at a company in a relative valuation and go, wow, that looks so inexpensive. Then you find out it's in the Congo. Then you find out, it's in a high-risk country area. That's why it's at that discount. But you need to do this relative valuation.
Okay, you brought up gold, and that's good because I wanted to ask you about gold. You recently said that you thought 2012 is going to be a huge year for gold. How big a year?
Over the past 10 years, the normal sort of, I like to call the volatility of gold. It's been a non-event 70% of the time to go up 15%, down 15%. Anytime it goes up 30%, and it's done that many times within the year, it quickly falls 15 to 20%. So you get the higher highs and the big corrections. So it is a non-event for gold to go 15% from these price levels. And last year this time, in fact, it went up 30% from these price levels. So that's just looking at the math. I do not see any real changes in most of the governments in the world to start paying high interest rates because they have so much debt to roll over in the G7 countries. And all of Europe has so much. I mentioned in my presentation that America has $3 trillion just to roll over. Japan has $3 trillion just to roll over. And Europe has another, 3, 2, and 3. We have $8 trillion of money that has to be rolled over. And then the best way for governments to basically to destroy the currency is to monetize it, and that's what they're doing. They're giving you, they say, buy my currency, I'm going to pay you 1/10%, but inflation's running at 4%.
So where do you see gold going in the near term?
So historically, whenever that happens, and the magic number is 2% over the inflationary rate, so you would have to have interest rates in America go to 6%. I don't see that happening. So I see that gold will trade higher along with the printing of money to facilitate these governments from rolling over their debt levels. Last week, 30-year mortgage in the US at an all-time low.
Do you think this is a long-term trend then for gold?
I think it's a long-term trend for sure. I do, and I think what would derail it would be two things: a rise of interest rates over 2% over the inflation, and emerging countries seeing shrinking GDP per capita.
And you don't see that happening right now?
I don't see it. I see that the governments in many emerging countries have real infrastructure projects in place. They're trying to get caught up and be where we are. And at the same time to do that, they're having printing of money. And I think that that's going to continue. Rising GDP per capita, higher consumption of gold. Big fact, we saw it in China. They raised the minimum wage. What did that do? Food inflation, and all of a sudden the consumption of gold.
So when you're looking at gold and you're looking at the different markets we talked about, gold isn't worth as much in one place as it is another. Is there a particular area of the world that you're most interested in?
It rotates around as you go through different cycles, etc. I'd be very interested to see what happens in Russia after the elections, which are only a few months away, because Russia has huge opportunity on the upside, but the Putin stamp now is create a lot of negativity, and sometimes that provides great opportunity upside. Turkey, if oil prices fall to $70 a barrel, the turkey manufacturer, a lot of clothes you buy, Hugo Boss, they're all made in Turkey. Huge GDP growth, great economy, gold production. The gold producer that you can buy in Turkey, it grows as 10% of revenue, 20%, has the highest returns on capital in the world for a gold producer.